Page 9. Okay, if you haven't downloaded the handout, make sure you do that before you start this. And this is page 9. And we're going to start into the eliminating unprofitable business segments. And how do we make that decision? And here we have an unprofitable division. It's losing $20,000. So naturally the question comes up, well, should we eliminate it? So this is making, bowler hats, I guess. So the net loss is $20,000. If the bowler hat division is closed, then $35,000 of the fixed overhead would have to be allocated to other divisions. In other words, $35,000 of the fixed overhead would still be there. So, if it were closed, well, our sales would be zero, our direct materials would be zero, our direct labor, zero, variable overhead, zero. Okay, well, the only thing we have left here is fixed overhead. So, we would still have $35,000 of this. So if we close the division, that's a 3. Now it's even a worse looking 3. If we close the division, we would have a $35,000 loss because that fixed overhead would not go away. So the question is, would you rather lose $20,000 or $35,000? So should it be closed? No. See, the difference between those two is what, 15,000? That would be $15,000 worse off. Another way to think about this is, even though it's not as profitable as we want it to be, it's still contributing $15,000 towards those fixed costs. So the $15,000 is the difference between the losses. Page 10, if you want to pause it and try to do it on your own, that wouldn't be a bad idea. Very similar problem. And again, we have a division that is losing money. So this segment of our business is losing money. And if it's eliminated, then the $25,000 of allocated fixed costs would have to be allocated to other divisions. Well, would you rather lose $10,000? Or, if we close the division, it's open, we're going to lose $10,000. And if it's closed, we're going to lose $25,000. Well, obviously we're going to want to keep it open. Even though it's not making as much as we want it to, it's still contributing to it. Again, $15,000. So $15,000, we'd be $15,000 better off keeping it open. So No. The company would be $15,000 worse off to go to close. So you want to keep it open. Again, it's not as profitable as you want it to be, but it's still at least contributing some to the covering the fixed costs.